prices on existing homes could rise as well. Morgan Stanley analysts this week noted an immediate impact should be fewer builds and pushing the marginal buyer into the existing market. So that new demand shifted their forecast from 2025 from their base case 2% year-over-year price decline on existing homes to closer to their bull case of a 5% price gain.
Wow, what a difference 1 week makes. We have tariffs going into effect. We are past Liberation Day. You saw on that news article there or newscast that now we're predicting a more bullish housing market. And why is that? Is because if rates drop, that is going to push buyers into the housing market. Hey, everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And boy, oh boy, has there been a lot of changes, this week from Liberation Day, from the market predictions. So let's jump right into the big, story of the week, which is interest rates. We can see right here the 30-year fixed rate hitting 6.55%. But look at this chart here. Look at this drop. This is 6.75 all the way to 6.5% over almost a 2-day period. And why is that? That's because with tariffs, that is pushing money into pushing treasury yields down, pushing the stock market down, and making rates get better. So if you were currently in a transaction to buy a house and you hadn't locked in your rate, you are getting the benefit of a lower rate. But is that good or bad for the housing market? I hear a lot of different people making predictions about what's going to happen with tariffs. I listened to a 3-hour conversation with Howard Lutnick, the Secretary of Commerce, with Scott Bessent, another 3-hour conversation with the United States Secretary of the Treasury. And this is what I do know. I try not to get political because housing is not political, but obviously markets are affected by political things going on in the world. And what I don't like is, regardless of who the administration is for people rooting against the United States. Even if I have a politician, a president, or whoever doing something I agree or disagree with, that's just my opinion. Ultimately, I hope it works out for the United States for the best. And as far as tariffs go and these things, the reality is nobody knows. When I listen to Howard Lutnick and Scott Bessent, there is a plan. It's not like there's no plan. Could that go well? Yes. Could that go bad? Yes. So we just don't know. And people up front that are making these bold predictions or bold statements, the reality is we've never competed this way in tariffs, or at least not in the modern era. And the really is we just don't know how this is going to play out. But in the short term, what we do know is rates are the beneficiary of that. When we look here at the new Fed meeting or the new Fed probability tracker that I use coming up here for the May meeting, this was almost a 90% lock that the Fed was not going to cut rates. Now it dropped down to under 70% to 67%. And we look in June, it's pretty much 95% that we are going to cut rates in June. That is a dramatic increase from where we were at, which is a big deal because that means the Fed is pricing in more rate cuts. It looks like the Fed could have went from pricing in 2 rate cuts to maybe 4 or 5 in 2025, and that would make a big difference in rates. That means that we could get down, if we're at 6.5% now, we could get down closer to 6% by the end of the year. Will that happen? There is so much to play out. What could happen is we could get in a tariff war, and we will see if that's good or bad for rates. Or this could all get unwound a couple months from now, 5 minutes from now, and that would push the stock market back up and probably be bad for rates. Again, we just don't know. What I do know, when I showed this chart before, I think this is really going to come into play into the housing market. When we look at this is the highest mortgage rate U.S. homeowners said that they would accept on their next home purchase. And we were looking here 2 seconds ago at 16%. At 6.5%, that's 10% more people that say, I would be interested in buying a home. When we get to 6%, look at the jump from 7%. Now we have 41% of people saying that would be acceptable for their next home purchase. And this means there is a lot to play out. We do not know what is going to happen over the next few months. So we're at, sitting on the sidelines, center stage, watching one of the greatest shows on earth as all this plays out. Could it be incredible? Yes. Could it be terrible? Of course. We just don't know. Could we get a recession? Yes. Could we not get a recession? Yes. It's really no way to know. Will a recession be a deep recession, Or will it be something that, happens and then all of a sudden rebounds, especially if the tariffs get unwound, or all of a sudden people like in the other countries start lowering their tariffs, if we get a lot more manufacturing moving back to the United States. There are so many different ways that we could play out. So one of the things, if you're interested, I would listen to some of these articles with Howard Lutnick and Scott Bessent and kind of see what the plan is. And we will see if the Trump administration is able to pull it off. Me, for one, being an American, I hope they can. Now, what is happening is inventory is going up. And I had a lot of people, I've seen really over the last week or so, these crash videos coming back. And here's why, in my opinion, it's not likely going to happen. And the thing is, I've said this many, many times, there's probably not going to be a crash. And why is that? Is because even though inventory is going up, even though the market is a little softer, here in Central Florida, we're up to 6 months of inventory. There's hardly anybody, when we look at foreclosures and we look for people that have very little equity, that are like on, that they really have to sell their house. They're not. They have room to lower the price. They also have the ability to take their house off the market because they have so much equity and they have a really, really low payment. Remember, in 2007 and 2008, the housing correction that happened was because people had no equity, high rates, that were adjusting, that were in financial trouble. And we have hardly any of that. And if anything, if rates fall, that is going to push more buyers into the market. And that also will push some sellers off the sideline, definitely if we get below 6%. Will we? I have no idea. But in the meantime, housing markets where home prices are falling, number one on the list, Punta Gorda, Florida, according to Resi Club. But this is a 9% drop. Is that a big drop? Yes. Is it a big drop in the big scheme of things? No, because they're one market, right? When we go down really after the top 4 markets, all of these markets in Florida, Cape Coral, Sarasota, Naples, Panama City, these are all areas that were affected by storms and hurricanes and different things like that. We go pretty much where most of the markets that have had depreciation are 2 or 3%. Right? If we look here at Orlando, we have a negative 1.4% when we look all over Central Florida. When we look at lower rates and more people coming into the market, I believe we are going to have a really flat market. I've said it a bunch, 2 to 3% appreciation, in my opinion, by the end of 2025, and rates down by 6.25%. Will that prediction age well? I have no idea, but that's what I said at the beginning of the year, and that's what I'm standing by. Now, one other big change that I want to cover is FHA or HUD came out with their new ruling on the U.S. Department of Housing and Urban Development, or HUD, on their mortgagee letter 25-09 on revisions to residency requirements. And they have a whole new policy change on how they're going to look at permanent resident and resident aliens and all these different things. To make a long story short, it's going to be almost impossible if you're not a U.S. citizen or on a green card to get financing. Now, this just came into effect. It's going to go into effect May 25th, but it just came out. All the lenders are digesting this, and we will see kind of how this plays out. But again, if you're not a U.S. citizen or on a green card, things like work visas, school visas, stuff like that, we've been able to do loans on those in the past. I've done a lot of them. Those loans are not going to get done. And I also think likely that Fannie Mae, Freddie Mac, USDA, VA, all of them probably will follow suit, meaning that's all going to get tougher or get impossible, at least under the current administration. And again, we shall see these things change from administration to administration. So for the next foreseeable future, unless you're on a green card or U.S. citizen, you're probably not going to get home financing. We shall see. It's going to be a wild ride with tariffs. We're going to keep looking at unemployment, the 10-year Treasury. Does the Fed cut rates 5 times this year? And does that start pushing people into the market to buy a house? And what will appreciation do if we do have substantially lower rates? Will that 2 to 3% appreciation go to 4 to 5? We shall see. Will the stock market continue to fall, or will this all end up with a better stock market over the next 3-6 months? It is almost impossible to tell. If somebody's telling you for sure what's going to happen, the reality is nobody knows. But we will track all the data here. I'll give you my opinion on how it's affecting the housing market, especially here in Central Florida. This is Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week, and I'll talk to you soon.